what I believe in my bones is that we have a melt up in the market into the holidays. There's no way that they're going to let the markets crash into the holidays. But then the start to 2026 could be very hairy and very rough once people start to do new assessments, new analyst estimates come out for earnings. It's going to be tough for a lot of companies, I believe, to beat Q4.
Hey guys, we're back again with another Stock Sharks podcast. This is our fourth one in like 2 weeks. I'm here with my partner JR. We originally was gonna do the podcast, like try to do Mondays and throw them up on Tuesdays, but we're just gonna go with the flow and do these whenever we have some time, whenever news comes up. And we hope you enjoy it. If you do, please share with some people, share with your friends, your family, and criticize us, talk shit to us in the comments. We really don't mind. We're just trying to get better as the days and the weeks and the months go. Something new. Obviously, we want to bring some more guests, and we want to, we're going to end up clipping a lot of these podcasts onto our social media. Hopefully, that brings some traction. But yeah, JR, as always, nice to see you and hear from you.
Nice to see you too, bro. There's a lot going on this past week, so it's good we did 2 this week because it'd be a lot to cover next week with everything going on.
Yeah, there's a lot, especially earnings time right now. So why don't you get into it? I know you kind of wanted to talk about the markets, and the markets being at the top currently. So let's get into it.
All right, let's do it. So right now, there's a lot of discussion of a market top of a lot of people trying to time the top of the market, right, with the valuation stretching where they are. One thing I wanted to talk about today was the 4 stages of a bull market, right? And it's really tough to tell where we are in that phase because any one could be interpreted of it being that phase, right? So like the first phase of a bull market is the accumulation phase, right? And this often begins when the market's recovering, right? And do people say right from the drop off from last Friday, is the market recovering from that? Are we in the accumulation phase? The next phase is the markup phase. This is when momentum picks up and optimism grows. Now, if the market's going up completely for the past however long it's been, there's been some pullbacks. It's hard to define if that we're in that part, right? And back to the first stage, that's the early stage. The second one is the expansion phase. That's where the market would be. So it goes from early to expansion. And it's tough to say because usually in the expansion phase, right, economic indicators improve, unemployment decreases, interest rates are lower, and GDP growth strengthens. And we're seeing some of that, but we're also seeing unemployment go up higher. We're also seeing GDP growth slowing. So the next part, which would be the third phase of a bull market, would be the maturity phase, right? This is at the stage where the bull market's underway. Investors are confident. Prices continue to rise, but at a slower pace than usual. And that could be summed up as well. Essentially, from August, it's been a slow chug along in the markets with some volatility pullbacks. But that's a common size of a maturity phase of the market. And then the late stage, and this is where everyone on the internet's talking about right now, is essentially the distribution phase where people start to take profits, where valuations get outstretched and sort of a blow off the top moment. Hard to say where we are. If I was to guess, I'd say we're probably in between 2 and 3, between the markup phase and the maturity phase of the market. I'm not someone who's I don't believe in the whole bull or bears thing, or trying to sound smart. I just believe in making money. And when you're trading and investing, that's essentially how you have to view it. There's no teams in the markets, right? It's just more so you want to be at the right place at the right time. So yeah, that's essentially where I see it. I sent you some things over there. What do you think based on what I sent you?
I think you have the right point in regards to different market patterns and market timing. But at the moment, it's really hard to say where we're at because there are certain aspects in industries where I already feel like we're at the top. And especially, we're hearing about all these data centers and all the money getting put into AI and quantum computing. And it's like, you're seeing the markets go up while the economy still sucks. So you're right. If we could only time the bottom and the top, we'd all be trillionaires. But in this case, I wouldn't know where the market is. I'm keeping an eye with interest rates right now, including the mortgage rates were at 6.3% this morning. Seeing where that's going to come down, seeing what the Fed's going to do by the end of the year. And, we had gold hit $4,200, I think it was this morning, and right now it's a really weird time, to be trading, so it could be an exciting time to make a lot of money, but I honestly don't know which stage we're at right now. It's too hard, and honestly, I think it could be industry specific too, right? So, um, there's some markets that are lagging right now, and then obviously, the whole AI tech boom that booming
Or
right.
stock guy in tech, I mean, nuclear stocks,
Nuclear
companies that have
stuff, rare
zero
earths, seeing that now, right?
rare earths took a pullback today. Today's Wednesday, the October 15th. Rare earths took a major pullback today. Market was rather boring today in
Uh-huh.
terms of market movement. In the early mornings, it was pretty jumping, but then it slowed down completely. But yeah, rare earths took a slacking. I think nuclear is like a massive bubble because it's unproven. I don't touch any of those names. There's also like about 3 or 4 new SPACs that are nuclear companies that are coming to market. We'll discuss that
Okay.
later. But yeah, quantum, I think, is also, like I mentioned in the previous podcast that we've done. I'm not short these names. I just don't have the balls to do it because everyone who is taking shorts online who are posting about it, they're all getting slaughtered right now because those names continue to climb higher. So that's what I say. Time in the market's impossible. That's why I always stress, and like especially to the stock search community, is pick and choose your battles, pick and choose what you know, what you can win on, and what makes sense. You don't have to trade every single little thing, but it is tricky when there's names that are jumping and you're not in them, and you want to be part of that run. And through my research this week, I'll give you a prime example. You know how I do my research. I write down about 20 to 30 companies, and then I weed through and make a selection. And I kid you not, number 15 on my list was Papa John's, like ticker PZZA. And I wrote that down on Monday. Didn't take a trade, didn't do nothing. I was right about to do some breakdowns on it. I just looked at the valuation and the revenue. I was like, this could be a potential prime takeover target. And then sure enough, on yesterday, the Apollo has made an offer to acquire them, sending the shares up 21% in the aftermarkets yesterday.
Right.
So there's a lot of FOMO in the markets right now. And like we even saw this morning, we saw a few Stock Sharks members returning and re-signing up because the stock market's kind of the only game in town in terms of returns in the market. So is that the markup phase of an expansion, or is that the maturity phase where people are getting in late and it's a peak to potentially get there? That's why it's like where I mentioned before the different cycles of a bull market. It's very difficult, and what I believe in my bones is that we have a melt up in the market into the holidays. There's no way that they're going to let the markets crash into the holidays. But then the start to 2026 could be very hairy and very rough once people start to do new assessments, new analyst estimates come out for earnings. It's going to be tough for a lot of companies, I believe, to beat Q4, which would be the first 3 months as earnings are a lag in the market when you're actually in. I believe Q4 earnings will be very hairy and then potentially bounce back in April, kind of similar to what the playbook was this year in a way, but without the tariff noise. But there's still tariff noise, right? I mean, cooking oil sent the market into a frenzy yesterday.
Right. Speaking about earnings, this week, next week, a lot of bank earnings. What are you seeing with the bank stocks as of right now and the earnings that have come out?
Banks' earnings are strong, and it's a good thing or a bad thing. The last time banks' earnings were this strong, the market crashed, right? So that's where it is. You got to take it with two sides of the coin. The banking industry is very, very different than other sectors of the market, and those stocks don't move as much as the other sectors of in the market as well. So the banks, I don't touch or trade or any of them. I just made that prediction a couple podcasts when we first did it, that the regional banks would be in an M&A boost. I think private credit is something that is kind of disrupting the banks, but that is also a bubble and a linchpin that even bank CEOs were mentioning on their earnings calls could be a linchpin of the market. I mean, I think JP Morgan, either their CEO or one of their top guys there said it's like you find 10 different cockroaches in the private capital markets every day. And what they mean by that was like that auto lender that went bankrupt earlier or later last week, which hasn't really had effect on the markets yet or anything. So that's where it's like it's tricky to say where we are in the markets. That's why I just believe in my bones. We melt up higher into the end of the year. And then when the new year resets and everyone starts to look at things that don't add up and don't make sense, that's when we can start to see some sort of correction. But who knows? All that could happen tomorrow.
So how do you currently play or forecast in this bull market? Like how are you playing the stocks and the trades right now overall?
It's a good question, and big part of it is picking baskets of themes.
All right. And we
Certain
discussed
companies.
before, so
Yeah, we
yeah.
discussed it before. But yeah, just to touch on it quickly is just selecting companies that you understand, sectors and understand, and how they can benefit from what's happening in the market, and pick and choose. Like I mentioned last podcast, told people not to sell too early. Definitely made a few not mistakes, but just you have a 30 or 40% win on a name. I usually tend to like to take profits, and they still continue to run up. So know what you own, and don't overdo it. Don't leverage, right? There's no need to trade leverage. The market will continue to be open even if it crashes. And that's when the true opportunity truly comes, when you think about it, is when the markets do correct. And if you do scout this market right, you can make sizable allocations in some really, really great companies for the long term, and not have to look at the market daily and try to time it and trade it. So that's sort of my strategy, and how I approach it is trading the basket of themes, but not falling in love with them, because I do feel like these are some are flash in the pan moments. Some will be disruptors, but even when Amazon in 99, their stock went way up, but they still corrected, right? Their stock still fell down quite a bit before they became the mega that they are today. So it's just looking at it like that, understanding history, understanding that things don't last forever, and just make the right calls.
All right, Jared, here's a question for you. When you see one of your trades down, what, and I know you never played with stop losses, because I know that about you, but what type of percentage are you looking before you cut your losses usually on a trade?
It's a great question. I don't like to set stop losses, only because I just don't. I'm a conspiracy theorist when it comes to that stuff, in terms of like the algorithms being set to push it down to a certain limit to get people out. Now, obviously, not going to happen to me, but I just like to just do it from a principle standpoint. It's a great question, because we are in two stocks right now that they're not down much. They're like 10, 15% max. I believe in them long term. I believe there's strong M&A potentials with those companies, and they fit a certain theme. But it really comes down to like, what is my breaking point on a name? It'd have to be a major drop in earnings, right? Like, it's not so much the stock price; it's more so is what is the company telling? What's going on with the company? Is there a major gap in revenue growth? Is there
Got
potential
it.
scandal at the company? Is the CEO leaving? So I'll give you a great example. We're in a stock right now called ATS Corp. Bought it at $29. Um, 3 weeks after we left, 3 weeks after we bought the stock, the CEO departed the company. Now, it wasn't really a major deal. He just got essentially a better offer somewhere else,
Right.
right? So there's nothing wrong with the company. Revenues are still growing. When we first bought the stock, went from 29 to 34. Now it's back at 26, 27. It's not too big. But what would be my breaking point in a name like that? If revenue started to decline, if their competitors started to get acquired, and if the stock, like for me in my head, a stop loss would be $22 to $18 given the scenario. But also too, given the market scenario, I want to buy more there as well. So it's really a give and take of what's happening in the overall markets and what the company is telling you.
Got it. Cool. In regards to AI, what's the worst case scenario right now with all this fun stuff that's happening?
Worst
No.
case scenario is someone's faking their revenue. You know what I mean? And then that just sends it down, like how FTX completely crashed. That would be the worst case scenario. I don't think that's the case, because the biggest customers for Nvidia are like 8 companies, right? Like the biggest swinging ones out there in terms of cash flow. So I wouldn't look for that. I personally I'm bullish on AI. I just think it's like the internet, right? There's going to be a lot of contenders, and there's going to be a lot of pretenders, right? And this past week, I've been shifting through a lot of SPAC companies, potential SPACs that are going to market that are within that theme, and trying to weed out the contenders and the pretenders. So for me, I'm bullish on it. But it depends on what that question means. It's like, I get asked this question a lot by a lot of people. So, and what a lot of people are disguising the question as is, do you think Nvidia is going to hit $1,000 per share?
Yeah, I thought
You know what I mean? So it's like, okay, well, ask me that. That's a separately different question. So it's like, for me, I'm bullish on AI and certain pockets within AI. But do I think every single AI stock's going to go up? No, there's going to be 80% of them are going to be losers, and that's natural. And it's just like we're in the California gold rush back in the day, right? A lot of mines, most of them went bankrupt. The number one winner of that was Levi's jeans. because they were
Crazy.
just selling jeans and a lot of people needed jeans. They became out the most profitable from that. So I don't know.
Here's a question. Do you think we would still be in this bull market if we had the old administration?
Yeah, probably because a lot of the GDP growth goes towards the data center build, right? I was reading I don't really like the Harvard economy review, but they had a really good point that if you took out data center and AI out of GDP growth, we'd be looking at a severe recession right now. And I don't think that's stopping, but depending on who the administration is. Now, did the Trump administration pour gasoline on it to make it go faster? Absolutely. I was reading a really, really awesome blog of the Starship project build out. Some guy got a drone and flew over and like showed the developments over the last 6 months. It's insane how massive that is. And I think that's huge. And why I think 2026, that start of the quarter, like I mentioned earlier, will be a little hairy is because how much of that growth is still going to be more invested? Like how much more new projects are going to be coming? Will it be anywhere near as 2025, which was an enormous year for build out growth? So that's how I view it. I think
Got it.
same thing. Unless there was like a Zoran or a AOC as a Democrat, then maybe it'd be different. But that's I just don't think business stops for administrations. The corporations run everything.
Yeah. So let's get into the next topic. Back we talked a little bit about last time, but the SPACs, the back like 2020. What are the main differences between SPACs and during that whole, I would say, bubble and now?
Well, it's mainly the marketing, the different brokerages offering it. It's not as bubblicious as it was in like I remember everywhere was SPACs during the lockdown, right?
Yeah,
I
which
mean,
one did
there
you get burned on?
I got Canute, that one I got burned on, and
Virgin Galactic.
Virgin Galactic, yeah, a lot of people got hit on that one. That was one I actually avoided because I was just like, it didn't make sense. But Canoe, I really believed in those vans, and View Windows was a major loss for me. But overall trading for SPACs, it was like some of my best trading ever, like ever. It was insane the amount of returns we were able because we had a strategy, right? So before I get into that, I'll explain my strategy after because I want to talk about two other SPACs, but mainly like we've had 91 new SPACs so far this year, raising 16.5 billion, right? And that's a huge, huge jump from the past 2, 3 years. And I like to talk about them because there's opportunity for traders to find new liquidity in different type of trading names that you could take advantage of the situations, right? So last podcast we talked about two SPACs, and we put all the charts and showed exactly the ups and the downs and the catalysts that drop those names and the catalysts that rebound those names. If you understand those catalysts, you can profit pretty solidly on them from either a swing standpoint or even a long standpoint if you like the company. So what's different this year is it's like, for example, a good one is that Chamath Palihapitiya. He has one SPAC right now, not five. So like there's a lot more um appetite for quality for some of these names. Now there's some SPACs that are going public that are the pretenders, and you're able to identify that right away. But there's some that are going to be very, very interesting and could be potential contenders. One SPAC that we mentioned last was oh, actually, no, we didn't even mention them. But the one that that's I think is going to be interesting is this energy company. The ticker for it is, I believe, GIG, Honduras Energy, and it's not like a nuclear play. It's not a like these flash in the pan energy names. It's a solid energy company with ties to the administration. So that could be something that's big. I'm not looking to buy that one. The one I'm actually looking at, and it's up 40% since its SPAC and merger announcement is WLAC, um LLAC, WLAC, and they're merging with a company called Boost Run.
Okay.
Boost Run is tied to NVIDIA. They provide infrastructure for a range of GPU architectures, bunch of nerdy stuff. Anyway, it's a semiconductor play. And how I'm viewing that one is when they do the merger, I'm hoping the stock goes down from the price that it is. And if it goes below there, that's when I'd be looking to buy because I'm already late to the game. The stock's up quite a bit. No sense chasing it into this choppiness and then looking to buy some after that, right?
Got it.
So, yeah.
It's awesome. In regards to I know you talked about earlier about Papa John's. We were talking about, a potential merger or sorry, takeover bid that occurred yesterday by Apollo. We saw what happened with EA Sports. A week, 2 weeks ago. What else are we looking at in regards to the M&As right now? What else are you seeing?
So I think big name brand companies are the targets, right? If you look, even rewind it 3 months ago, Foot Locker, right? Dick's Sporting Goods buying Foot Locker. I think those are the ones that you got to be paying attention to, is big, strong brand names that have fallen from their grace, and private equity looking to acquire them, to put them within their portfolios. So companies that are below their market caps in terms of not even all-time highs, just average 52-day weeks, or even like their average stock price. You look for that. I'm coming out with a beautiful research report that's going to be on our website probably at Sunday, once we get it through the edit team and everything like that. Is a target of companies that, like a laundry list of companies that we think have potential to be acquired. And it's a lot of strong brand names, right? Like names that you're used to seeing, right? Usually, like I read a lot of M&A reports, and all the bank reports are putting out biotech, right? Biotech is the hot MMA thing right now. And I think that's more difficult to predict than actually winning the lottery. Like winning the law of 649, you have better odds at doing that than trying to accurately predict what mega pharma company is going to buy up a biotech. So for me, is looking at these large brands and seeing which ones could fit to either go private, merge. Like for me, I had Papa John's on the list because I always thought Papa John's and Wendy's would merge.
Interesting. We saw
Because
Wendy's have a merger in the past with Bill Ackman, correct? With
no, Bill Ackman broke that one up. So Tim Hortons and Wendy's used to be merged together, and then Bill Ackman led a group which is now known as QSR, which is Burger King, Popeyes.
Right, right, right.
I can't remember the third. I always forget and Tim Hortons.
Right.
And they also own Firehouse Subs. I don't know if you've tried them. But yeah,
No.
so QSR, that's what I thought Wendy's and Papa John's would do, and maybe with another third company. That's
Got
what a lot of these restaurant brands do, is they
So,
merge
are
into
you
one.
looking at restaurants and retail for these M&As right now, or is it industry focused at the moment?
It's part of one of the themes. So, and it's more so, and you would love this, is more so real estate. You're
Alright,
looking at the real estate value of these companies, and are they below their market cap, right? It's like if a company owns, like I don't know why it hasn't happened yet, but I always assume Wendy's would be a prime takeover target based on their valuation, the amount of franchises that the restaurant owns and has out there. It always just doesn't add up to me. And maybe there's something I'm missing there. But that's essentially the case with Papa John's, right? Their valuation got below their enterprise value, and it's a value, right? It's like buying real estate in a strong area where the houses used to be 600K, and now they're down to 400 for whatever reason, and they eventually will get much higher there. But that's essentially what these private equity companies are looking at doing. So I
I don't
think
know,
it's
from what I see though, and I like I said, I never looked into Papa John's stock or anything like that. I actually don't like the pizza that much.
it's
But
not the greatest piece in the world.
I don't know, you could fight Americans over that, but, I feel like when I see the Papa John's, I don't see much real estate behind it. I see, a liability as a lease, or a lease as a liability, right? So, Wendy's, like, you could make the case there. Papa John's, like I said, maybe I'm wrong, maybe
Mhm.
they do own some of the real estate space, but with these restaurants, and you probably don't know this on top of my head, but hopefully in the next pod you could look into it. Do you know the percentages of that are corporately owned and franchise owned?
Yeah, you can find that, and that's what I was mentioning with Wendy's, is that they have a select few that are franchise and some that the actual company owns.
Right.
So you can find that and with the help of, I mean, AI really helps with that. I remember trying to find this data before. It was really kind of tricky at times. We'd have to like really shift through something, but with AI, you can find it out in seconds. So
And then also
yeah,
AI is completely wrong though. So
you definitely have to double check. I'm just saying it speeds up the process to
yeah,
find it out.
absolutely.
So it's
Absolutely.
not just restaurants selectively that I'm looking at. I don't want anyone to think it's just a theme that I look into. Restaurants, brand names like retailers, like Foot Locker. Missed that one. It drove me crazy. But I also think software. There's a lot of software companies that are going to go private. Cybersecurity has been a thing that a lot of analysts tout, but I just don't see the action as much. I mean, Palo Alto Networks does do a lot of acquisitions, but they're never the companies I'm looking at. So if they think I'm I'm a little scored on that. But I think software as a service, like a lot of late 2022 IPOs, companies who did late cycle IPOs during the last bull run, they have a lot of interesting things to look at if the right acquirer buys them. And that's what about 20% of our portfolio is right now, is those SaaS plays.
Cool. Let's do a podcast sometime. I want you to do some homework on like different restaurants, where you see some value, and let's do a podcast.
Yeah, I mean, I
Right.
look at them a few. I mean, one that was in the news recently that is on my radar if the stock slips again is Cracker Barrel. Cracker Barrel is really interesting in terms of exactly what we're talking about. I hard to say if it will go private, but there's some corporate stuff, like a corporate hostile takeover going on in the background with the owner of Steak and Shake. I've never been to Steak and Shake. I never even heard about them until like 2, 3 years ago because just in Canada, we don't have that here. But the largest shareholder of Cracker Barrel is the owner of Steak and Shake. So there's some interesting stuff going on there. Like to me, like that could be a little TV show within its own way. And that's what I kind of like to look at for these M&A plays is it's like, what is the catalyst that's going to drive and forces someone's hand to buy this asset?
All right, JR. Great podcast. A lot of information. Any other thing you want to end this thing with, or
Yeah, this weekend we actually have a amazing and a lot of research coming out. We've kind of stalled for about a week and a half in terms of publishing new stuff because we wanted to really do the focus on a lot of these new offerings coming to markets and a lot of things being played into the market. So we have essentially like a bunch of research coming out. You can look at it as a puzzle board, piecing things together on how we view the market's going to end for the final quarter of the year and what our plays are going to be. So I'm really excited about that. I've been doing a lot of work this week and last week, doing a lot of hard research and just discovering new names and new companies and putting the pieces to the puzzle together. I think it's going to be probably some of our best work, even though we've had some amazing work this year. I mean, we're outperforming the market. We've had maybe one or two bad trades in terms of our overall trading for this year, but it's been one of our better years. And that pretty much would be it. So we have
you
that
have
coming
been
out.
killing it,
Exciting.
man. The research has been awesome. And as mentioned, if you guys don't know, please click the link in our bio and the description. Become a Stock Shares member today. Cancel
Like,
anytime.
rate, and subscribe.
Yeah. And subscribe to our page, please. We're trying to grow this thing. But yeah, we have awesome community. You get to be in touch with us as well. Any questions, one-on-one calls, weekly calls, of course, the research. And we're coming out with some software pretty soon, but really relationship based, community based. We don't want like a ton of members. We rather just have a select few that we could communicate and do business with, whether it's with the stock market or without the stock market. We like helping our members out and community out. But that's it for now. We'll probably jump on another podcast sooner than later than we expected. And yeah,
Well,
we hope
for our next podcast, let's break down a research report. How about that?
that's a
Let's
great idea. We could
let's
show
break down one of the research reports that I was just hyping up that we're going to publish on Sunday, and
sounds good.
let's walk everybody through it to show them kind of like what we do, what we
Cool.
look at, and then we could talk about each thing on there because it's going to be a long one and
All
it's going
right.
to be a good one.
Sounds good. Let's do that. Awesome.
All right.
Take care, guys. Talk soon.